Welcome back. Markets are lower this morning. Take a look. We're expecting a triple-digit decline when the opening bell sounds in about an hour from now. The Dow is down 170. The S&P is down 25. And the Nasdaq lower by 136 right now. One of the big stories of the morning in terms of earnings, Walmart topped holiday quarter estimates. Sales were up nearly 6%, while American e-commerce surged 27%. But the retail giant also issued a cautious full-year outlook and announced a new $30 billion stock buyback. As a result, the stock down 2% right now, weighing on the Dow as well. Joining me now is the Bear Traps Report founder, Larry McDonald. Larry, great to see you. Welcome.
Hi, Maria. Thanks for having us.
Are we now in a risk-off environment for stocks?
Well, you know, what's strange this year, Maria, is we're in a 270 basis point range, and all that means is inside of 3% for the year to date. But meanwhile, there's tremendous pressure under the surface. The amount of stocks is over 110 stocks that have had more than a 7% intraday decline. And so and just look at Microsoft. You're talking about $1.2 trillion of loss there on this whole CapEx overdose binge. Yeah, so internally, the market's already kind of crashing a little bit, but we've been held up by kind of some broadening out, which has been very helpful.
Well, a part of the broadening has gone to metals. We were just talking with John Yovanovitch, who's running President Trump's Project Vault to stockpile critical minerals. And I want to get your take on pricing there. When you look at things like gold up in the double digits this year to date, or silver, even though it's rolled over from the big gains, but having had a great 2025, or copper, what do you want to do in that regard? You still want to hold hard assets here, Larry?
Well, you know, you guys have been so supportive. We launched our book, How to Listen to Markets Speak, over 2 years ago. And that's the whole concept, is a great migration of capital from financial assets, which are just paper certificates, stocks, bonds, over to hard assets. And absolutely. But we are seeing a broadening out, you know, not just the copper names and the gold, the platinums and palladiums, but now we're starting to see a move toward oil. Look at Occidental Petroleum today. You're getting a nice broadening out of the commodity trade. And so we're looking at the DBA, we call the agricultural ETF, and I think that's the next stage where the commodity trade broadens from metals, oil and gas, and then out to agriculture.
All right, so you're really talking about the companies, the mining companies, for example, not the actual bullion and the commodity itself. You'd rather go with the companies that are doing the business there.
Right. So at the early stage, well, you and I have talked about this on the last year. The early stage, everyone moves into the mothership gold, the commodity itself. But as the commodity trade broadens, you start to see people moving capital into companies, and that's where you can get tremendous upside. Occidental Petroleum is actually trading almost below where Buffett bought the stock. So your average person sitting at home right now can buy Oxy, you know, cheaper than where Warren's buying it.
Wow. Larry, stay right there. We got some economic data just crossing the tape. Let me get to Cheryl with weekly jobless claims and the trade balance. Cheryl.
So the claims actually came in lighter than expected, 206,000. The estimate was for 225, and this is a big improvement from last week at 227. We got 1.869 million in continuing claims. That's about on target. The U.S. December trade balance, though, this came in at negative 70.3 billion. That is actually a lot more than was expected. We were looking for 55.5 billion, a deficit anyway. Philly Fed came in pretty good, 16.3. The Philly Fed Business Index, this is, you know, it's Eastern PA, Southern New Jersey, Delaware, and better than we got the reading on that last month. The trade balance number is the big surprise here this morning, Maria.
All right, thank you, Cheryl. We want to get your take on that as well, Larry, because the macro story feels good. But look at interest rates this morning and the yield on the 10-year after the Federal Reserve minutes from the January meeting were released yesterday, revealing a split opinion on rates. The yield now is up 3 basis points, sitting at a level of 4.10%. Some Fed officials apparently talked about an increase in rates being on the table. Others obviously want lower rates, and broadly speaking, the market is expecting 2 to 3 rate cuts this year. We've got the first read of fourth quarter GDP out tomorrow morning with 3% annualized growth expected, and the Fed's favorite inflation gauge, the PCE index, out tomorrow as well, with expectations of an increase of 0.3% and year over year 2.8%. Larry, your thoughts on the macro story? How do things feel?
This is, Maria, this is an incredible time to be alive. What's happening in the markets. If you look at copper, oil, to some extent, oil's up, because of tensions in the Middle East, but rates, consumer staples, everything we're seeing is this shock coming from AI that's going to impact the jobs probably in April, May, June. We're hearing maybe 200,000 job losses from massive artificial intelligence disruption. Look at C.H. Robinson last week. Look at Expedia. Companies that have had, nice moats, beautiful moats, are now being attacked by AI agents every single day, and that's going to hit the job market coming up. So the bottom line is, for investors watching us right now, you want to be in a stagflationary portfolio where you have some job losses, but still you've got some nice industrial growth. And that's why the industrials are outperforming the NASDAQ by the most, probably in 25, 30 years.
All right, real quick, Larry, what do you want to do with the portfolio here? Are you selling into any rally, or are you the market down today? Does that feel appropriate to you?
Well, in our core portfolio at the Bear Traps report, we had the most long positions April, May, and June of last year. We added a lot into that paint. And now we're raising a lot of cash. Buffett has a record amount of cash.
Okay.
We're with him. And, you just sit in the boat and you wait. You wait for those nice. And remember, Maria, one thing. Drawdowns in the early part of a midterm election year are very common because the president wants to do the most controversial things as far away from the midterms as possible. That means in the first quarter.
Understood. Good point. Larry, good to see you as always. Larry McDonald.